Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So this week I want to cover off the wild swings we've had in commodities, and they literally have been wild by any stretch of the imagination. So we're going to cover off from a couple of perspectives. We all know that the reason they're swinging wildly is the Russian trade situation. And so as that gets closer, so as an example, when you issue sanctions, the boats that are already moving are still going to continue to their ports. But it's probably over the next month or two that we're really going to start to see the change in supply situation adapt. And so these early price moves are literally swinging all over the map. And yet the underlying pressure is still there. So we call it a bull market, and if you've ever been to a rodeo, you'll know riding a bull is not the best 8 seconds in the world. So it's a tough ride. I want to talk specifically about the changes that we're seeing in the commodity markets, and maybe a couple of ways that we can look at that and just kind of stand back and have a larger picture. And then the real question will be, is if the economy is going to go into a recession, then commodities will sniff that out first and they'll actually start to drop. And so, well, maybe not first, maybe the bond market is first, but we're going to see that be an important part of the discussion as we move into the summer months. And then the stock market will actually react before that. So if the economy falls into recession, we could actually see the stock market heading higher while the economy is getting worse. And that's just kind of how the stock market thinks. They're looking ahead, and that's probably one of the big reasons why we've had the NASDAQ sell off more than 20%. All of these things add up to create a pretty difficult environment, and commodities were a safe haven 2 weeks ago, and Monday they got absolutely smoked. So really an interesting dichotomy to see how this goes forward. So the next thing I want to cover off, if you're interested in the work we do over at Osprey Strategic, the new website is up and running. One of the things we're going to try and roll out is a little bit more information on the Schnell strength indexes and how we use some of the information in the market to help people be more confident when they're putting money to work. And then obviously we'd like to have long-term trajectories for capital, but when you're in a bear market environment like we're currently in, you just don't get that because you have too much volatility week to week. But at the end of all of this, we'll get a nice buy signal and it'll start to turn up. And if you're interested in that, you can head over to the Osprey Strategic website and check that out. And again, we offer a couple of things there. There's a weekly newsletter and a weekly video that are pretty important. The weekly newsletter is probably a 10-minute read maybe, but the video is an hour. There's a monthly recorded conference call focused on the big picture. And then Dwight does at least 5 trade setups every day. So all of that comes together, and I think it offers quite a good overview for the market and gives you the confidence to be in the market when the market is rising. And then it's very clear when the market's not going to be strong, and you want to just try and avoid those down periods to prevent the wiping out of capital. Okay, let's jump on over into these charts. And what I want to cover off here, so this is a look at the commodities over 1 week, right? This is a 1 week time frame, and you can just see heating oil, crude oil, 31%, 23%, 24%. These charts are swinging wildly. And then gasoline, big changes now down to $3. Now the real question is, how do we get through the inventory data? And they're going to take some out of the strategic petroleum reserves from around the world. But we really need to be careful because those strategic petroleum reserves were to be there when we were actively engaged in war to make sure that we still had enough energy to participate. Right now, we're using them as a price control mechanism, and we have used them that way for almost a year. So this is becoming more more of a price control mechanism so it doesn't get out of hand politically. But I think we really need to be aware of the purpose of the Strategic Petroleum Reserve. Anyway, it's definitely taking the edge off the prices as they climb. We'll keep watching how that's going. You can see lumber here is down 7%. That's got a bit of a rolling head and shoulders top sort of formation that hasn't really crystallized into breaking down hard, but we need to watch that. You can see gold and silver have unwound, relatively big, right? Gold was up a couple hundred and now down a couple hundred. So this is a pretty wide swing for gold. And then what we want to watch for as we come through the Fed period here and options expiration on Friday is how do the markets absorb this actual change in commodities, because it is relatively new. Now, they went on some, I'll call it, a unreasonably quick move higher. The real question is, even if the war stabilizes and stops or whatever, maybe that's the hope here, is that the war stops, how soon would Russia be allowed to start getting back on the world trade system? And if it's a year out, then that's obviously still going to add pressure. Natural gas hasn't moved around as much, which is quite interesting because it didn't get fired up as much either. But the point being, it's really a commodity by commodity look, and I don't have uranium on here, but it's been swinging for the fences as well. So all of these things are really creating some pressure in the market. And I think it's pretty important to go through them. So I'm just going to click on these charts and just show you what we see here. So here's natural gas. We could all see the big run it had up, and now it's pulled back. And it's making a second wave higher. But on this wave high, the momentum is already starting to mellow. And perhaps we're about to go through kind of a period like this where it falls down. Or conversely, it really does start to get bid. And the reason that we might expect it to get bid is if Europe doesn't get a chance to refill their storage, then they're going to try and buy as much natural gas out of the rest of the world as they can, and they have to outpay the other countries of the world to get it imported, so Japan, China. As that process goes on, and let's say that they try to backfill their natural gas as much as they can, that becomes a pretty important area of concern, obviously, because if you don't have enough natural gas to get through the winter, then people end up with hypothermia and that kind of serious issue. So we're sitting here watching to see which way natural gas goes, and the momentum so far is still rising. But if this was to roll down here and start to cross below both the 10-week and 40-week, we'd probably have a little different look at it. So that's an important chart just to be aware of the hesitant nature of it so far. And then here is the rare earth metals. Now, in this rare earth metals ETF is some other companies that aren't necessarily just metals related. They can be companies that are involved in EVs and that kind of stuff. So this chart, though, is just starting to lose its 40-week moving average and the 10-week moving average. PPO is just barely above zero. This is not a good look. And what we want to notice over here on the left is when this started to fall down and kind of roll over. This was actually a long slide that went on for almost 2 years. So if we're sitting at that same point, and again, if China is going to slow down, that would impact rare earth metals. First of all, because they supply a lot of them. And second of all, if they didn't have demand for a lot of them, then we're in a bigger problem. This chart to me really looks difficult here. So just those first two areas of the market, quite odd to see them breaking down so hard. Now here's silver, and again, we can see that it started to break out to new 8 or 9 month highs. Our momentum indicator is just getting towards zero and is now starting to flatten. It's early in the week, so a weekly candle, you got to wait for the weekly close. Now let's say it shoots up here on Wednesday, Thursday, Friday after the Fed meeting and options expiration on Friday and a few other issues. From 25 to 27.50, this is a 10% swing in 1 week. So let's keep that in mind. But in general, we've been building higher lows here long before the Russian invasion. or the Russian situation. And so what I would prefer to do here is just be crystal clear about watching the price action and seeing what happens this week with the Fed and options expiration. And if it's going to get sold off, we're probably going to know quite a bit more in very short order. This is the actual silver miners, and you can see they never really got on board with going up. So let's just go back and look at the silver chart again. So this is silver, and the 10-week moving average is trying to cross above the 40-week moving average, and in this case, we're above both. When we go over here on the silver miners, we're still trapped below the 40-week moving average, and we're just hovering above the 10-week moving average, and they're nowhere close to crossing. Momentum indicator hasn't got up into positive territory. We want to see it above zero. That's typically when this chart works the best. So if we're going to fail here, this is a pretty important place to fail. Don't really want to see that. But again, just keep watching this, because all of these charts, again, had a big volume surge, but are starting to give it back this week. Now, whether they're just consolidating the gain or actually starting to break down, this is the time to be aware of it, because I think if this chart starts to break this little 2-month uptrend and starts to turn down, you probably want to take profits in those metal stocks. Soybean has been going really, really strong, and you can see the big push roughly 4 weeks ago. And then what we're watching for now is this going to top out at the prior high? And this comes down to food supply globally. And again, we're not really going to notice the shortage in shipments out of the Ukraine and Russia for a couple of months here, because all of the ships that were loading and leaving are on the water, and they're going to bring that product elsewhere. But if we end up having a shortage of grain being shipped around the world, then this is going to make for a very tight supply situation, and we want to watch how corn, wheat, soybean all adapt to this. But this was a breakout to a new high, and now it's just, I'll call it consolidating. I can't say it's rolling over, but we did have a relatively robust volume thrust here. And, sometimes that can be timed with a market top or a market bottom. In this case, with the pressure that we're starting to see globally, I'm actually surprised this volume isn't higher and trading with a little more urgency, like maybe back in August of 2020. So the volume to me seems too weak, and perhaps this is ready to pull back down. And commodities are wild swinging, so it's important to just be aware of the latest kind of situation there. So here's steel, and it had tried to break out through this 63.67 and 63.07 level, made new 52-week highs, and then last week just made a slightly lower close, and this week so far it's making a lower high, lower low, and a lower close. That's not really good if all of these commodities all start to top out at prior highs. And the bigger implication for me would be that we're heading into a recession and the economy is going to slow. So all of the demand that we've seen for commodities all of a sudden goes away, because we just don't have the consumer demand. And that would start to show these charts topping out. So here's sugar, same sort of thing. We made our highs back in November, was our final high, and we had some highs earlier, September, October. But again, we're in a downward trend here. We had 1 week where we pushed up, and now we're starting to make lower lows and lower highs. The big issue is our momentum indicator is almost ready to go below zero here again. So if all of these are starting to roll down, then the Fed doesn't really need to fight inflation as dramatically. I've got the solid line here on oil. Let's just look at that first. So we've got this uptrend line, and oil's trying to hold that right now. Let's just say it comes down and even gets down into the high 80s. This is still higher than anything we've seen in 5 or 7 years. So it's a real important level to watch for. Now, we soared up to 115 for the weekly close, but I think we all know that oil actually, if we look at it as a high-low close bar, this made it all the way up to 130 and now is back to around 96, or what did we close at? 96. So with the wild swing in oil, the real question to me is, do we have enough oil coming? And again, I think the pressure starts to show up when the supplies for a month or two down the road aren't here, and it actually changes people's behavior. I talked to somebody today, and they said they didn't take a 3-hour car trip for a golf game because of the price of gas. So it does change behavior, and it changes it quite quickly. And as we see these price thrusts go on, we need to just be aware of the big change here. So for me, again, I would still expect these to go higher because the inventory data is so tight and we just don't have new product coming on. But I could be all wrong, and these commodity traders could be finely tuned and just say, you know what, you got to take these profits. And if it wants to roll down, let it. And they'll try and pick it up back here at the 40-week moving average or something like that. So Brent has done the same thing, obviously a big pullback. It had run up even higher. But the main thing, and it doesn't look so big on that West Texas crude chart. Let me just go get the high-low close bar one more time. I want to show one particular thing here, maybe just 1 year. So what you see is, you know, here's the size of the bars all the way through here, and then we literally go from 95 to 115. That's a pretty heady move of $20. Here we went 105 to 130, so that's a $25 move. And now this week, in a couple of days, we've already gone 110 to 95, so $15 swings. These are wild, wild swings. And the real question is, where do we bottom out? Now, is it down here at 85? I'll call it another $10 lower. So we test the breakout level and then we go back up? Or are we kind of already there, bouncing off the 10-week, and we start to move higher from there? So this is a pretty good question for us. And Brent has the same issue that we see in these other commodities. Now, I'm just trying to figure out. Here's cocoa. So cocoa hasn't really done anything and not really part of the discussion. I think we can all agree that that's a pretty hard chart to trade. And then here's copper. So copper had broken out to new highs, made it over $5, and then quickly pulled back and retreated, now down to $4.50. For me, one of the reasons I want to watch this chart so much, as you can see, back in 2011, we got up to 458 was our closing high. Well, we're at 451 right now. So if we just draw, well, let's just go down here and put a horizontal line on there, $4.51, or 458 actually, and then put it solid and make it black. And what you can see here is we're trying to break through this prior resistance. And we've tried and tried. Well, if we fail here again and go below both the moving averages, that's a pretty weak indication. China is one of the biggest buyers of copper. So if China is slowing down due to COVID, then that's going to create a different situation for us. And that situation, takes all of these commodities that have been looking so good and starts to break them lower. When we get to gasoline, this is a pretty big uptrend, but this is wave 1, wave 2, wave 3, wave 4, wave 5. And if you're an Elliott wave author or technical analyst, what you want to watch for here is perhaps we need a 3-wave correction to kind of take the froth off. And we've got a 223 high here and a 243, a 233, a 213. So I would say that 225 level is pretty important. And just see if we stay above that for very long. And if we do, that's meaningful. But we could even break out, pull back, and then take off again. So this is a wide range, though, right? Here you're going to lose, 30% of the price of gasoline, and that's from 0 to 350. If you just want to talk about the recent surge, it was from $2 to 350. If you're going to pull back $1.25, you've given back almost 80% of the gains that have popped up since the beginning of the year. Looking at gold, same thing, a double topping structure here, which is really odd and technically difficult. And one of the reasons I say difficult is because obviously if oil doesn't hold its breakout, copper doesn't hold its breakout, gold doesn't hold its breakout, all of the food commodities don't hold their breakout. A couple of things we have to assume. One is that not necessarily every trader in the world wants commodities to go higher. There's some large players in the world that would like to keep those under control. So they're going to do everything they can to adjust the trading or put pressure on the trading so it can't go higher. So they'll sell a whole bunch to kind of make the market drop and then buy low before it turns back up. Airlines would be an example, trying to do that in crude oil or in jet fuel. So you see these different double topping structures, and they're pretty important for us to at least be aware of how many charts have this double top. Now, in my perspective, the big picture was as Russia goes and all of these charts start to break out to new highs, this looks pretty bullish. Well, if they're going to all fail here, then that's an even bigger message that what we expected isn't happening and it's going actually the opposite way. Well, then we need to get a lot more defensive, and perhaps we end up moving back into a tech trade if the whole world is going to slow down the economy. Really interesting stuff. Okay, so here's the gold miners, and they briefly made a new 52-week high, 39.44. They got up to 40.26, briefly broke out and pulled back. Now, so far this week, they made a lower low. They've definitely made a lower high. They opened lower, but we're at the top of the bar so far. So that's Tuesday. Now we got the Fed meeting tomorrow, and I think the real important thing is, do these explode higher on the back of the Fed raising interest rates, or do these actually just break down right here, right now, and move dramatically lower? So that's going to be a tough call over the next couple of days, and for people positioned in those markets, it's definitely going to rock their world one way or the other. Heating oil goes back. We'll just also open that up to a bigger time frame. You can see here's the 2008 high at 4.15, and we briefly shot up to 4.61. Well, now we're all the way back at $3. So we've given up a huge amount of the gains in heating oil. And again, not everybody wants heating oil to go higher. If you're an investor and you own the oil stocks, you probably do. But if you're a company buying heating oil, jet fuel, diesel fuel, kerosene, all those types of things, we call them distillates. If that market is going to top out here, that's pretty important data. And you can see that this 330 level is pretty big, and we're sitting right here today at 303. How the market handles this breakout pullback, is this just a wild swing and then it continues to go higher, or is it actually marking the top and demand starting to slow down? And as demand starts to slow down because of that higher fuel price, again, people don't want to make a 3-hour trip or whatever, all of a sudden we're going to start to see quite an interesting change in these markets. So, and that takes me back to lithium. I have one more that I just want to show you, and this is uranium. And the idea here on uranium is this ETF's just getting going. I can also use URA. They trade similarly. But the big picture here was we had this big uptrend going on. We dipped briefly below the 40-week moving average. We rallied back up. Now we're trying to take out this 29.89 high. And if we can't do that, that's a problem. But look at the volume that we saw come into this ETF. Lots of stuff going on around Russia and their ability to have uranium. And if they're not going to sell it to the rest of the world, then that puts pressure for the rest of the world. So we see charts like Cameco and Denison Mines and those types of charts trying to head higher. Very wild trading in the commodities this week, and I think you'll agree that the charts, what looked like were clean breakouts on a lot of these charts a week ago, now look like failed breakouts, and we really need to be in tune with that whole swing. Okay, the last thing I wanted to show you was, I'm just going to go to summary here, was the bond market. And the one thing that we had going on here is this high yield chart has been declining meaningfully, and it lines up with pretty much all the big drops in the market. Now, if high yield could start getting a bid, that would be important. You'll notice on the PPO, our momentum indicator is very, very low. And if we run that out back to the 2005, 2008 timeframe, in 2008, this ETF was just starting to get going. But what you see here is this thing fell really, really hard. Well, we're at about 80.5, so that's right around here. We still have a ways to go, but if all of a sudden if high yield really starts to break down, and it could break down because of problems in China's property section or anything like that, we've got lots of issues here. We also have a chart of the European financials, and they were trying to rally last week on the news of a bond to start paying for energy infrastructure in Europe. They're holding up near the top of last week's bar, but haven't really moved much in 2 days. So another reason to just kind of question where we're at. If this all doesn't work out, we're going to know it pretty quickly. And so I think it's kind of really critical to understand the big picture on all of these. And the commodities are basically saying, I'm trying to break out. Now, if they fail to break out here, that's an even bigger signal that there's something more at work. So be careful and follow the commodities well. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recording on the StockCharts TV YouTube page. Thanks, everybody. Feel free to head over to Osprey Strategic for more information. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.